How aggressive or how conservative should our investment portfolio be? That's the ultimate question that we're always trying to ask. We're always trying to determine what kind of return do you need to achieve your goals without taking on additional risk that we don't need to. Our friends at Dimensional put together this really cool chart that I wanted to share with you guys, and let's take a look at it. So this chart shows different portfolios from the year 2000 to the year 2024, 24-year period. That obviously includes the 2008 crisis, COVID, and all those different things that happened along that way. The portfolios on the left start with 100% stocks, so something that's really aggressive, and it works its way down until it's 100% bonds, which is a very conservative portfolio. And then it's interesting because they compared three different parts of this. The first thing I want to look at is the average returns. So with a 100% stock portfolio, your average return in a diversified portfolio, not only domestically, but abroad as well, is 9.59% per year average return. You can see by the rest of the part of that chart that the best year was 36.21% in the positive. And then the worst year that portfolio had was a negative 38.95%. So the question is, you may want to get a 9.59% average return, but can you tolerate a 38.95% drop is the question. As you look at the other portfolios as it moves more conservatively, you can see that the average return goes down, but so does the risk that you're taking on the downside. So then the question is, when you look at your portfolios, how should you be allocated? Somebody that's really young, has a long time for their money to grow, they can be a lot more aggressive. But somebody that's just saving maybe for a down payment on a house, or they have the money already earmarked for something in the very near future, they should probably be a lot more conservative because they don't necessarily want to take these big swings on the downside. So I think this is just something really good to look at. I think it's worth not only checking in with us if we're managing your money for you, but also just check in with your 401k, wherever your investments are, and compare their allocation from the percentage that's stocks and bonds and see if it makes sense. I just think it's a really good check-in. Let us know if you have any questions, if you want to look at any money that you have out there, or you want to look at your portfolio with us, just reach out. We're always happy to help.